A book called Black Money and Tax Havens by Professor R Vaidyanathan. Black money. Black money has two interconnected dimensions, domestic and global. Domestic illicit money is associated with corruption and tax evasion. But all black money is not due to corruption, even though all corruption leads to black money. For instance, you may visit a doctor and pay him a cash of, say, rupees 500 as consultation fees. If he does not show it in his income, then in a sense it is a black money. So is the case of payment in cash in a petrol pump, which may not be included in their income and subsequent tax calculation. But it is also to be noted that all income on which taxes are not paid is also not black money. For instance, agriculture income in India is not taxed. Agriculture constitutes nearly 18 to 20% of our gross domestic product, GDP. And so the entire agriculture income cannot be termed as black money since it is untaxed. Hence, there is a need for caution in discussing black money, which is both a flow on an annual basis and a stock in terms of wealth like land or gold. It is to be recognized that when an asset like land is acquired by partly black currency, then it stands to reason that the seller possessed the currency and then transferred ownership to another. Therefore, black money is never obliterated by black assets as is the popular belief. It merely changes hands. There is another assertion which is made that hardly 1% of Indians pay income taxes. This too is not fully borne out of facts. Actually, in our country, there are nearly 25 to 30 crore families, of which around 9 to 10 crores are rural and agriculture dependent and hence need not pay taxes on their income. So, nearly 15 to 20 crore families are taxable and 5 crores of these are submitting returns. Except in urban areas, double income families at tax brackets is not very common. From that point of view, around 25 to 30% are in tax net, which is not a small number. The issue of black money has been one that has concerned several governments. Consequently, there have been several governments, committees, and other economists' estimates regarding domestic black money. An attempt has been made to discuss this idea in depth and detail. Tax havens. The other important aspect that constitutes a considerable portion of this book is amount of illicit money kept abroad in various tax havens by Indians. Raymond W. Baker, an Harvard and Brookings scholar, did the first serious work on the global stock of illicit money. His book Capitalism, Achilles' Heel, Dirty Money, and How to Renew Free Market System estimates the stock of illicit money at $11.5 trillion, to which $1 trillion gets added annually. Around $500 billion a year flow to the rich from the rest, according to Baker. Aided by the Ford Foundation, the Baker-headed Global Financial Integrity Organization, the GFI, is a program of the Washington-based Center for International Policy, has estimated country-wise flows of illicit money. It puts the outflow from India during 2002 to 2006 at $137.5 billion. Going by that figure, one wonders how much more could the loot since 1947 be? Dave Carr, who was involved in the GFI study, has clarified that the GFI estimates of the loot from India are understatement.